Hi, good afternoon. You're watching Closing Trades right here on ET Now, and we're holding out okay while we've largely consolidated and haven't taken any cheer or leg up from the global cues, be it the Dow futures, which was scaling higher by 500 points when we came into trade, or for that matter, the rub off from Asia, which also held out quite nicely. We've been rather sedate and been very ranged. In fact, at one point in time, we dipped down quite a fair bit. From there, also, we've seen a little bit of a recovery play out. So let's see how the last 1 hour of trade plays out. It's realty, it's new age, metals, chemicals, power. These are sectors which are the winners today, but pressure from some of the large cap heavies like FMCG, cement, which has been a drag, automobile, and banks, which have also languished in trade. So gainers today, IndusInd Bank, Eternal, Trend, Sun Pharma, these are names which are holding up. But on the flip side, ITC, BEL, Geo Financials, Bajaj Finance, HDFC Bank, these are all weighing heavy on the indexes. For the breadth of the market as well, it's been rather sluggish all through today's trading session. So while Cummins is holding out a good 7%, Deepak Nitrite, Prestige, which is higher by 4%, RBL Bank, or for that matter DLF, which are all holding up in trade, there are also laggards like Godrej Consumer Products, down 2.5%, Max Healthcare, down roughly 2%, Union Bank, Chola Finance, and then Apollo Tyres, which is also down by about almost 3% as we speak. But Kunal, hi afternoon. Welcome to the show. What's been your own sense? We're completely ignoring and shunning all global cheer.
Yeah, and I think even on the expiry front, there's not major volatility which we were expecting in the indices. I think a major reason for that, could be where the drop in the India VIX. I think that's one of the reasons why you're not seeing a major shift of change of range for the index, because generally we see that if the India VIX was at 18.5, 19 levels like what we saw yesterday, the volatility could have been much on the higher side. But so far it looks like with the ebbing off of VIX, you're seeing the index also just about cooling off and consolidating into a trading range. On the option side specifically, since it's the expiry, we were looking at 24,700 and 2400, 24,800 as two strikes where you'd seen maximum amount of put built up as well as call built up respectively. So we should expect that the index should expire between this particular range, 100-point range. But broadly, the view still on the index is on the bullish side. And over the last 1 week or so, we've seen a marginal drop, 300, 400 points on the index, and I think that should be taken as a good opportunity to add or accumulate further.
All right, so that's the take coming in on the index front. Not much expectation was there when it comes to the expiry move, and we are just consolidating in a very, very tight range. But well, of course, some of the themes are doing well, but where should you place your bets? Let's try to decode that with a whole of experts joining us. And let me welcome on board Sandeep Sabrawal on the show as well. Hi, Sandeep. Good afternoon and great to be speaking with you yet again. Help us with the kind of sectors that you are looking at this point in time. A lot of sectors churning underway. The theme of this particular month has been defense, has been some of the counters from the railway side as well. But what is looking good to you right now?
I think defense stocks rallied subsequent to the Indo-Pak conflict and potential increase in order. Some of the companies obviously came out with very good results, like Bharat Electronics, etc., while the results from some others were subdued. And railways stocks have bounced back from extreme oversold level, like from last year levels. Many of the railway-related stocks got sold off a lot. But there's no clear change in the railway investment theme at this point of time in terms of the railways actually picking up steam in terms of getting into investing more like it did in starting 2022 onwards. So I think these could be just bounces because the stocks have got sold off a lot. The results picture has been pretty okay. So in line with expectations, some companies above, some below. So nothing much out there. Overall, uh, I think markets are decently placed. The risk in the market is just the kind of promoter selling which we are seeing in the markets, starting with the larger ones like Singtel, Interglobe Aviation Sale, as well as ITC, and then a slew of mid and small cap promoters selling their stakes. So I think that is the risk to the markets. X of that, overall macro scenario looks okay.
What's the trend that you really need to draw up from these promoter exits which are happening? The fact that these are ripe valuations in the market couldn't get any better? I mean, is it warranting caution now?
In some of these stocks, I would say yes, because if many of these companies are giving very strong outlook for growth for their companies, and then are coming out and selling huge quantity of their stocks at very high valuation, then getting absorbed by the uh, institutional investors because the companies are given very strong guidance, that itself is a dichotomy, because if you're so confident, why are you selling? On the other hand, I think for some of the larger companies like Interglobe, or let's say BAT for ITC, etc., there I think we cannot surmise the same thing, because there in Interglobe Aviation we've seen continuous sales by Rakesh Gangwal over the last few years, and now I think we are coming to the end stage of that. So hopefully over the next 1 year, all of that will get sold out. And for ITC also, I think BAT needed the money, and so they have sold. So I think I would be more concerned on the small and mid cap promoter sales rather than the bigger ones. But then that said, even the bigger ones then take out the liquidity from the system, and to that extent restrict the market upside.
I want to run in some of these stocks with you, wherein we have seen large, promoter exits. You've got a Bharti, you've got an ITC, Interglobe Aviation, and even Paytm. Let's pick up Bharti and Interglobe first, because these have, in some sense, been very leadership names. Do you sense any weakness on the charts?
Not really. In fact, these stocks have a habit of just about stalling after a phase of a decent rally. I think both of these stocks are actually going through very similar kind of a price action, where you're seeing Bharti Airtel as well as Interglobe Aviation. I'll probably club even the likes of ITC. I think more or less range bound. Yes, maybe the range would have shifted for stocks like ITC after that sell-off, which we've seen yesterday. But I think it should not impact the medium to longer term trend for these stocks. What matters is, for these stocks is consistency of volume action if in case there is any kind of a major reversal. Like for example, many of the mid caps and large caps, they started to see high volume price action in mid of September 2024, and from there on we saw the reversals happening for stock prices, initially very gradually and then picking up pace going forward. But I think we are not seeing those kind of signs where the volumes have increased up higher. So except for those one-off sell-off, one-off selling which is happening on the back of higher volumes, I don't see any major pattern reversal for these stocks. And in fact, the best part about these names and many of these stocks, like for example, Interglobe Aviation, Bharti Airtel, etc., is that these stocks are perched much higher above their long-term moving averages. So there's a lot of cushion for these stocks, even if there's any kind of a short-term price aberration into these names.
All right, so that's the day coming in on some of these large caps. But MNCs, they are cashing in on from India, because from BAT trimming its ITC stake to speculations of BP exiting Castrol, multinationals are unlocking billions in their Indian arms. FIIs have also pulled back from the large caps like Indocin and Tech Mahindra, but the Nifty MNC index tells a mixed story. What are the exits that are heating up, and why rather these exits are heating up, and is this a long-term trend? Sharad joins in with all the analysis. Sharad.
Well, yes, India is a high growth market, and that is why MNCs are looking at important exits at higher valuations as well. MNCs have been paring stake in their Indian arms. Of course, for ITC, they are not promoter, but the largest investor, British American Tobacco, recently they sold 2.7% stake, now worth being almost 13,000 odd crore rupees. Bharti Airtel, Pestel sold almost 1.2%, almost 13,221 crore rupees. And Whirlpool and Hyundai, both of them had exits. Whirlpool, of course, has stated that they would be exiting more of their stake. And Hyundai, recently the IPO came and the parents stole stake of worth almost 17.5%. Also, Castrol, the speculations is of BP exiting, especially the restructuring in the lubricants business. Bajaj Finserv or Bajaj Finance, if you look at it, the alliance is exiting the JV with almost a 26% stake which is being bought back. So that is also a value unlocking coming for the MNCs. And lastly, the LG Electronics IPO, that's expected to range between 11 to 13,000 crore rupees, and the IPO is expected to come in the second half of this financial year. Interestingly, apart from this, FIs have been reducing stake in the large caps, and the current holdings is coming at, of course, 29.55%. That's IndusInd Bank. Almost 17% stake have been sold by FIs over the last 3 years, and also Tech Mahindra, Trent, and Kotak Bank. These are the Nifty companies. We have seen there has been a massive sell-off coming when it comes to the FIs. Now let's look at how the Nifty MNC index has formed. There are like 30 stocks where more than 50% is held by foreign ownership, and over here over the 1 year itself the gainers, it's Hitachi Energy and Suven Pharma. Now the name is Cohance Life Sciences. Apart from this, United Spirits, Crystal, and About India also make it to the list. Now first let's look at the losers in the MNC space. From the Nifty MNC index, we have largely the capital goods and automation names, ABB and Honeywell. Of course, the valuations were a concern in the street. And so if you include SKF and Timken and even Cummins India, actually entire pack, you see there has been a correction, there has been a rally, and of course the Cummins India came with their numbers also, which was weak. But overall, 1 year itself, there has been a big profit booking in the capital goods space, especially in the MNC part.
Right, okay. In fact, I'm going to, pick up one of those stocks, Cummins. Look at the stock right now because it's holding up very well. While, yes, the numbers weren't as great, but the guidance has been very strong from the management. They're saying that they expect margins to improve and that they're seeing double-digit growth in FY26. I'm going to get Sharad back and highlight what the guidance and the commentary from the management has been like.
We did have a good quarter in terms of all our segments performing well. There was, if you're comparing to the same quarter last year, there was a lot of pre-buy in the power gen segment, and that was not there because we have moved to CPCB 4 Plus fully, and that is what you saw in this quarter. Although if you will see at a full year perspective, our margin performance is pretty healthy. And this is a quarterly impact, but I would say that from a full year performance, the margin performance is as per our expectation. And we continue to put in efforts in terms of cost reduction and improving our products for the market. So we anticipate the margin performance to sustain. In the CPCB 4 Plus segment, definitely the competitive intensity has increased in the quarter. I spoke last quarter that all competition launched their products and there is intensity in the market. We have been able to hold on to our prices till now. But as any new technology product gets launched, it takes a few quarters for pricing to settle down. We do believe that another quarter or so it will take for pricing to completely settle down in the market.
Okay, that was Shweta Arya, the MD at Cummins India, highlighting the management commentary. But Sandeep, helping where within the entire cap goods space do you see value on the table? Would you look at Cummins, L&T a little bit more? Anything that you like?
Yeah, L&T is well placed, so I think it should continue to do well. And among the other companies, I think right now, although many of these companies have indicated that the order booking should pick up and execution should pick up, for many of the companies, the result delivery has been subdued. And valuations are not very cheap if you look at the large MNC companies like ABB, Siemens, or even Cummins, or the other companies like Max, etc. So it's only a question of trying to buy at the right valuation. I think valuations are not cheap even now.
All right, so that's the day coming in on Cummins India. But Sandeep, the other factor that the management of Cummins India was actually highlighting was the data center theme. While they say that they are witnessing strong demand in the data center business and in the power gen segment as well, in the domestic market, they see the demand coming up. Because of late, and Sandeep, given the market volatility and correction, we have stopped discussing about such themes. But do you believe that this is a long-term story and select companies are doing very well, and if you can highlight some for us?
Companies will be tough to highlight, but I think overall, directionally, it's a global theme and it's there in India also. More and more investments into data centers, etc. So often I'm unable to recollect the companies who could be key beneficiaries.
Cummins, ABB, L&T, what's looking like a good near-term trade?
I think there is a strong consensus move into all of these stocks, coherent move into all of these stocks. In fact, it started off with L&T, if I'm not wrong, just about a week or a couple of weeks back post results, where the stock managed to break past above a series of underperformance. There was a point where I think L&T was trading or had managed to break past above the 200 DMA. That move, I think, and I think the move, follow-up move for the stock post that, I think has led into the confidence into the other names. We've seen Siemens, for example, that stock has managed to break past about the 3,000 levels. Cummins today is seeing a classical breakout. It's almost like a 3-month breakout for Cummins of a major consolidation. Then I think ABB also has a very similar kind of a very slow, gradual uptrending move. So all of these stocks have actually started to show signs of a very strong recovery. Now the ideal trade over here should be to go back with the leader and the one which had given a fresh breakout initially. And even if the stock is consolidating, and I think in that respect, I would believe L&T could be one of the better picks. But in terms of a slightly high momentum, pick, Siemens could be the other stock, and I think the stock which is still down, I think 5% if I'm not wrong from its 200 moving average, there could be a slightly higher alpha which could be generated over here. So both L&T as well as Siemens could be one of the best picks from the pack.
Well, the star performer today is, guess what, as surprising as it may be, IndusInd Bank, and this after last evening. There were red flags which started waving once again, and now SEBI has barred the former MD and CEO Sumant Katpalia from buying or selling shares in the markets, accusing him of sitting on price-sensitive information and not making timely disclosures around high-risk derivatives exposure. In fact, Ankur Mishra, my colleague, is here with more details on what exactly has SEBI said about the former promoter.
Market regulator SEBI is probing insider trading angle against 5 individuals, including former CFO Khurana and MD and CEO Sumant Katpalia. But the bigger question is, when did SEBI actually came in action? We have been informed through sources that SEBI started investigation ever since disclosure was made by the bank on 10th of March 2025 that there is a discrepancy in the derivatives portfolio and the impact could be 2.35% of the net worth. Therefore, market regulator obtained all the emails, and in that it was found in December 2023 itself, there was an email exchange between the management. In fact, former MD and CEO Sumant Katpalia had stated in an email that there will be huge impact of the discrepancy in the derivatives portfolio, and in that email exchange there was also found that the impact was assessed to the tune of around 1,500 crore then itself. However, when you remember the commentary which was given by the management on 10th of March, it was told that only after Reserve Bank of India guidelines came, the impact was assessed, and it was a material impact, and only then disclosure was made. So SEBI has clearly found that unpublished price sensitive information, which is UPSI, and it comes into the domain of insider trading. Hence, these 5 individuals were probed ex parte. What does ex parte means? Meaning they were not given any time for hearing. So now SEBI will obtain details from these 5 individuals. For now, there is a freeze on their accounts, demat as well as bank accounts, and the loss to the tune of 20 crore is assessed by the market regulator. Out of that, 14 crore has been obtained for former CFO Khurana and around 5 crore for former MD and CEO Sumant Katpalia.
Okay, further and further allegations against the former MD and CEO now Sumant Katpalia made by the market regulator. Sandeep, this curious case also continues. The reverse aging also continues for the stock. I guess around 600, the market had already baked in the worst that could happen for IndusInd.
Yeah, so I think in most of the financial cases, as we've seen Aisha in the past, what is the worst is sometimes very tough to evaluate. So there is a possibility that the worst could be over, and there's a possibility that many more things could come out of the cupboard, many more skeletons could fall out. I think people need to be cautious about these kind of stocks at this point of time when there's a management change happening. When the management changes, what else will come out, we don't know. So there's time to be cautious. I would say that this is not time to be brave in these kind of stocks.
When it comes to such counters, that's the take coming in on IndusInd Bank. But other than that, today we are seeing select chemical counters that are doing very well. Well, of course, leading it from the front is Deepak Nitrite, almost a 6% jump coming in on this particular stock. But Kunal, quickly, if I can have your take on this counter, chemical as a theme has been holding up well. But what exactly are you spotting for Deepak?
Yeah, in fact, many of the stocks in the chemical space, whether it's SRF, it started off with that. And then I think recently we saw Aarti Industries also making a comeback just about that 470, 480 plus mark. So I think on the back of this, I would expect that this could be a decent momentum for Deepak Nitrite specifically. Today's volume uptick, which we've seen into the stock price, comes at a point where the stock is completing almost a 7 or 8 consecutive day of negative price trend. So this could be a very interesting turn of events for Deepak Nitrite, and this could probably mean that the underperformance which was there with respect to other peers for this specialty chemical stock, I think that should be over, which means we should be seeing a decent upside going forward. The nearest target which one could expect would be around the 2200 mark, which is also the breakout point for the stock in the medium term.
Okay, just want to check in on Max Financial as well, given that the MD CEO Prashant Tripathi has stepped down. He was, of course, holding the helm for the last 6 years. So that's one stock which is also gapped down, and then from there it's mildly recovered. Jatin Gedia as well joins in on the show. Jatin, hi, afternoon. What trends are you picking up in the market? Any pockets which are looking like they're showing leadership?
Yeah, good afternoon, everyone. So, as far as pockets of strength goes today, IT and metals are showing a positive momentum. I believe that some of the metal counters are looking strong. One pick that we have from the metal space is Jindal Steel. So, it has been consolidating since last 5 to 7 odd trading sessions. Has formed a triangle pattern. We are expecting a breakout in the Jindal Steel stock. So that is a buy or a long idea from our end. One should keep a stop loss of 948 for target of 1000 on the upside. Another stock that we just discussed is on Deepak Nitrite. So post the recent decline, it has now resumed its trend. So Deepak Nitrite has a significant upside from current levels also. So that is a long idea. Stop loss should be placed at 2060, and on the upside, we are expecting 20 to 45 as a target.
All right, so those are the long-term bets coming in from Jatin. But with this, viewers, it's now time to slip into a very short break. But before we do that, India Inc. Leader Sunil Bharti Mittal is making a case for a flat 25% tax rate and foregoing the complications around direct and indirect taxes. At the CII Business Summit, the Bharti Enterprise Chairman adds that US-India bilateral trade negotiations are in advanced stages. Listen.
Policies which continuously are getting better need to be further demystified and simplified. The movement towards 25% corporate tax, to my mind, was a fine example of the government, where they said give up all your exemptions and move to a flat rate of 25%. I'm surprised the entire industry has still not moved there. Let's also get rid of the old fascination with those exemptions and move on to a simplified, flat 25% tax rate. We should not stay back in the old regime. There are lakhs and lakhs of crores stuck in litigation, in direct taxes, in indirect taxes, and other regulatory matters. Vivad se Vishwas tak type of schemes need to be brought up. Government will get very large amounts of money released by those schemes. They can be put to good use now. Maybe the government will win in 10 years' time, and that money may become available to the government in 10 years' time. Why not settle it now on the lines of VSBT? More money in the hands of the government today will give us the necessary desired fillip to the infrastructure, to various social programs that is vitally needed, and importantly, release the industry.
Welcome back to Closing Trades right here on ET Now, and taking a look at the markets. We are holding steady as of now, though. All right, it's been a good recovery from the day's lowest point in the last 5-6 minutes or so, because Nifty is back in the green territory. Almost a 50 point of uptick is what we are seeing, while for Nifty Bank as well in the last 5 to 6 minutes, it's almost more than 100 points of recovery that we are seeing on the banking index. So in the last half an hour, we are seeing that expiry action indeed kicking in on the benchmark indices. But along with that, at the CII Business Summit 2025, CEA Nageshwaran lauds India's growth story but discusses the challenges facing the nation's policymakers. Adds that India is on track to become a $5 trillion economy as tailwinds emerge and policy becomes less unfavorable for growth. Listen in.
Policy has become less unfavorable for growth this year compared to the settings that we had in the course of 2024. The growth rate that we penciled in the economic survey between 6.3 and 6.8% and sustain it for the longer period seems like a reasonable prospect, and the International Monetary Fund agrees with us. That is why they expect the dollar GDP of India to rise to $6.8 trillion by financial year 2030-31.
Okay, let's move further, and we've got Nikhil Rankasi, our equity alternatives at Nuvama Asset Management, joining in at the show right now. Nikhil, hi, great to have you on the show. Pretty much at the fag end of the earnings season, you've only got Bajaj Auto left now, from amongst the big boys at least. Tell me, what's been the count for you for this earnings? What have been the biggest hits and misses?
So, good afternoon, Aisha, and thanks for having me on the show. So broadly, if you look at it, Aisha, the earnings season has not panned out that great. On the IT side, we've seen quite a bit of negative surprises because there was uncertainty because of this tariffs, and because of that, as we head into Q1, a lot of decision making has got deferred. And therefore, my sense is IT has seen some downgrades. And over the course of the year, we will continue to see some downgrades in IT on the back of that. On the pharma side also, I think this result season has been pretty subdued. And the problem there is that Revlimid was a big contributor to earnings for most of the pharma companies. And it goes off patent in Jan 2026. Right now, we do not have the visibility as to what new drugs will be able to fill that big void that will be created by Revlimid going off patent. And therefore, pharma also should have a very challenging FY26 in that sense. On the positive side, I think telecom could prove to be a pretty defensive sector as we head into FY26. One, we are seeing problems with Vodafone not going away. And therefore, the top two guys should continue to see subscriber addition, and 3-4 months down the line, we should again have some sort of tariff hike coming through. So this is what I would say on the hits on misses. In terms of the consensus earnings for FY27, 6-8 months back, we were at close to 1380 rupees. If you look at the EPS estimates for FY27, that number is now down to almost 1310 rupees. So close to 5 to 6% earnings downgrade is what we have seen in the last 2 quarters.
Hi Nikhil, good afternoon. This is Shrishti also joining in. So you did tell us some of the key takeaways for some of the sectors there. But Nikhil, this particular month we have seen select pockets doing well. But what's the visibility that in the next couple of months, which sectors can actually outperform the rest? Because defense, select railway counters, select counters within the consumption basket has done well in the month of May. But what's the outlook for the next 2 months, given the fact that the monsoon will be in full swing? The earnings season has transpired decently well for ourselves, and even other than that, the noise around the whole tariff uncertainty will also settle somewhat near the mid of next month.
So, good afternoon, Shrishti. My sense is the easy money is already off the table in markets. So we have seen markets rallying from almost 21,800, 22,000 levels that we hit in Feb end to now back to close to 24,800 levels. So we've seen a 3,000 points move on Nifty. And if I give the median multiple of 20 times, then probably we are staring at a single digit upside in index over the next 9 months, so to say. So my sense is we will consolidate in this broad range of probably closer to 24,200 on the downside and 25,500 on the higher side. We need to consolidate 2-3 months here. We have to see how earnings pan out for Q1 and Q2 and what commentary we get from management. Because right now what is happening is we are continuously seeing earnings downgrade quarter after quarter. And for markets to gain momentum and re-rate from that 20x levels, we at least need one quarter where we again get to double-digit earnings growth and we start to see some sort of upgrades on the market. So the base case clearly is that we will have a markets which will consolidate here for some time. Next 2-3 months could be pretty muted for the markets from here.
Okay, that's the take coming in on the markets right now. In fact, let's just address one pocket in the market, which the street at least seems to be very divided on, because ask any fundamental expert and they say IT is is a sector to completely steer clear of. But on the charts, perhaps that may not be the reading. Jatin, what is your own sense whether IT has reached that oversold territory and one can look to buy some of these stocks selectively?
See, in the case of IT stocks, what we believe is that there was an initial upmove, but post that we had the consolidation since last couple of weeks. So it's consolidating around that 20-day moving average. So technically, it's a buying opportunity. We believe that in some of the frontline IT stocks as well. Infosys, for that matter, is looking extremely positive from the frontline pack. So if I have to give levels for Infosys, then I'm expecting levels of 1640 to 1650 on the way up, and the crucial support is at around 1550. So risk reward is favorable for going longs in IT at current levels. A decent amount of consolidation has happened on the daily charts, and now we are expecting resumption of the upmove in the Nifty IT and IT stocks. So overall, view is positive for IT stocks.
All right, so the view is positive on the IT stocks, but Jatin, can you help us with some names there which are standing out for you?
That Infosys is looking good on the daily charts. It has taken support at the 20-day moving average and it's resuming its up move. So on the charts, 1650 is the target area, and the stop loss should be placed at 1550 for Infosys.
All right, so that's the take coming in on the IT space, and Jatin also highlighted a couple of counters to actually watch out for. But on to some of the macro data, all eyes will be on the US GDP data. Along with that, India's data will also be coming in when it comes to the GDP numbers. Now, India economic growth is likely to continue to see an uptick and is seen at 6.8% in the January-March quarter. But what to expect this time around? Let's go across to Varun to find out what's the expectation for the India GDP growth. Varun.
Well, we are expecting the GDP numbers to come at around 6.8% in the Q4 of FY25. Now, if you look at the second half of FY25, it was actually better than the first half of FY25, where in the second half, you have seen good government expenditure and also the rural demand has shown some improvement. Overall, the domestic travel and services export was also good for this second half, and that's the reason we are expecting a good GDP number. In fact, if you look at some of the high frequency indicators, they have actually performed better in the second half of FY25, better than the first half of FY25. Agriculture production, that is expected to be strong, and that is actually supporting the overall rural demand. Although the urban demand has not catched up to that extent. The construction activity, that too is resilient. Also, in the month of April, if you see, the overall goods export that have seen some spike. Now that would reflect in the Q1 FY26 numbers, but overall, if you look, the household consumption, it is likely to remain somewhat range bound, and also the difference between the GVA and GDP will be there, and that will be because of the higher net taxes. So we are expecting good GDP numbers. If you look at the RBI estimates, that was around 6.3. We are expecting it to come at around 6.8%. So let's see, after a beat on the IIP, if we get a beat on GDP numbers as well.
Okay, that's the beat that one is anticipating when it comes to the GDP figures. But we spoke with the shipping secretary today, T.K. Ramachandran, spoke with us and discussed the potential of the shipbuilding industry, saying that shipbuilding in India is still at a very nascent stage, but growth for the sector will sustain going forward. Let's listen in.
The overall growth is good, and we expect the momentum to continue, if only because apart from the economic growth, the logistics costs have to reduce, which means there is a requirement for more ports, and the reduction in logistics costs will have an impact on the goods that are brought in or taken out. So we think that overall the sector is going to do very well. I think the outlook for the Northeast is very good, and the Far East policy of the government is also helping the region to grow, and this is leading to an increase in the cargo. Shipbuilding is a nascent industry in India. 1%, we just produce 1% of the ships in the world. We own 1% of the ships in the world. We do not have a financing insurance ecosystem. We do not flag a large number of ships in India. So this entire ecosystem needs support. We don't think there will be much of an impact, for the simple reason that many of these commodities are not the ones that there is too much of variation in volumes of. For instance, crude. We do not think that the imports, especially the crude, there's not going to be much change. The petroleum exports, the product exports, again, not much change expected. So as far as we are concerned, we are seeing very robust growth, and we keep getting these seasonal impact happening in some or the other way. We had the Red Sea crisis, before that we had COVID, before that then we had the Ukraine crisis, and so on. So multiple crises have left the industry very resilient.
All right, so that was the exclusive conversation with Shipping Secretary. But other than that, take a look at the markets, because it's not just that Nifty has scaled past that 24,800 mark. It's almost 100 points of jump coming in on that index, while Nifty Bank recovering from the day's lowest point. 150 points of uptick is what we are seeing on the Nifty Bank index, while India Wix continues to slide lower. 9% cut coming in on India Wix, giving charge to all the bulls out there. But in focus will be Bajaj Auto as well on the back of the earnings. The earnings this time is expected to be muted, but the key to watch will be the margins. 20.2% is what we are expecting, given the fact that the currency was quite favorable for the company. The volumes, especially in the export market, has seen a jump of 19% on a YY basis, and along with that, a 3% average selling price hike on a sequential basis is what the company must have witnessed, and all these factors should bode well for Bajaj Auto. So the key to watch will indeed be the margin figure, but along with that, how is the company looking at the revival of their KTM business now? That is something that we will be watching out for. And with this new fiscal, all eyes will be on the commentary, industry growth outlook commentary that company every time comes out with when it comes to the export as well as domestic market. So Bajaj Auto will indeed be in focus, but Jatin, if you can help us with a quick chart check on Bajaj Auto, how do you see the stock at 8,875 rupees?
See, as of now, the chart structure is still positive. Yes, it has run up quite a bit from around 7,600 to 8,800 with 9,000 odd levels. So it's a bit overstretched in the recent run up. So there could be some amount of consolidation. On the upside, we are expecting targets of 9,200 on the way up. So those who are holding should continue to hold the stock with a trailing stop loss at 87.80 on the downside, considering there are the results. So I think there could be some amount of volatility. However, as of now, the chart suggests that the uptrend is still intact and it can rally towards 9,200 on the upside.
All right, so that's the day coming in on Bajaj Auto. But Nikhil, give us your sense on the two-wheeler pack as well, because the marriage season is one of the triggers for the two-wheeler companies. And given the fact that it's early monsoon, the rural demand is expected to pick up. Do you believe it's once again time to look at some of the two-wheeler majors which have already corrected 30 to 40%? And what is your pecking order like for the two-wheeler counters?
So, Shushti, if you look at the industry growth per se, on the two-wheeler side, we are still looking at high single digit to very low double digits in that sense for the industry growth outlook. And specifically, if you ask me, names like Bajaj Auto or for that matter, Eicher, are trading at the higher band. So for Bajaj Auto, on an FY27 basis, we are looking at an EPS of close to 380 rupees. And even if we give 25 times multiple to that earnings, we are looking at a fair value of closer to 9,700, 9,800 on Bajaj Auto, which is like a 10% upside from current levels. Eicher, again, if you look at it, the volume numbers have been fairly constant in that 85 to 90,000 per month number for RE. And there also, even if we assign 30 times FY27 earnings, the upside is probably muted at single digit. The only name in the pack which optically looks very cheap is Hero MotoCorp. So there, the stock is trading at closer to 16, 17 times FY27 earnings. But the problem with Hero has been that it has been continuously losing market share. So therefore, till the time we don't see Hero outperforming the industry growth, it is unlikely that Hero will grow and trade above 5,000 levels. So that is something that you have to watch out for. If we see 2-3 months where Hero Moto on a consistent basis starts outperforming the two-wheeler industry, then that is one stock that can prove out to be a dark horse. And the second point we need to keep in mind is, if you look at the commentary from most of the steel players, we've seen close to 2,500-3,000 rupee hike on steel prices because of the safeguard duty coming in. And that is likely to impact margins for a lot of these guys as we head into Q1 and Q2. And so even if we could have close to double-digit top-line growth, the EBITDA growth will probably be in single digit because of the margin pressure that most of the two-wheelers names will face.
Right, okay, that's the anticipation from the entire motor unpack, given that Bajaj Auto is due to declare its numbers today. But let's get some closing ideas also on that note, and some BTST trades, in fact. Kunal, what's your stock list like?
So I'll go with two buy calls. BSE comes back into the buying zone with a fresh breakout, which you're seeing on the charts today, just about the 2400 mark. So we'll look out for targets in the range of 2490 for BSE. Stop loss now could be traded higher since the stock has moved up in the last half an hour or so to 2425 or so. And Anantraj is the other stock which looks attractive. The stock is heading towards a classical bullish flag formation breakout. So buy with a target of 585, stop loss at 525.
Jatin, any BTST ideas you may have for our viewers?
Yeah, definitely. So we have one from the banking space, that is Frontline Axis Bank. So it has been consolidating for last couple of weeks. Now today there are signs of revival from the 20-day moving average. So I believe that it can start a fresh leg of up move. So Axis Bank is a long idea at current levels. 1190 is the stop loss level. And on the upside, I'm expecting 1225 in the case of Axis Bank. Another recommendation that we have is from the other stock, which that is Paytm. So Paytm is forming a very strong bullish candle on the daily charts. We believe that it is now on the verge of a breakout from a 3 to 4 week kind of a consolidation. So Paytm becomes a buy. 868 should be placed as a stop loss, and we are expecting 895 as a short-term target.
All right, so let's watch out for Paytm as well as Axis Bank. Those are the buy calls coming in from Jatin and buy calls coming in from Kunal as well. But the oil and gas space today has been doing very well. Case in point being some of the counters like Oil India, IGL, MGL, they are holding up well. Other than that, chemical plays are doing well. Real estate as a pack. And life insurance too, that theme has been holding up quite well. But Nikhil, I just wanted to have your take. Anything that you're picking up when it comes to the life insurance as a sector? The reason I'm asking is because just after LIC's numbers, we all witnessed the kind of jump up. HDFC Life has been doing well, and even today, SBI Life holding on to good gains.
So, Shushti, if you look at it, over the last 12, 18 months, the sector had underperformed a lot because when tax benefits were taken away from, investments above 5 lakh rupees, there was some slowdown in growth that we have seen for a lot of these companies. And that slow growth is now slowly coming back. We've seen improvement in VNB margins also for a lot of these names. Given the fact that multiples had derated to one standard deviation below mean, there is some buying interest that is starting to come back on these names. And the second part is every time there is a GST meeting around the corner, there are always expectations that these guys can be exempted from GST, which could give some trigger to these companies. So my sense is it's an anticipation of that, which is leading to up move in a lot of these stocks.
All right, so that's the take coming in on the insurance back. Well, of course, the stocks have been doing well, but Kunal, quickly, if you can help us with your take on the insurance counters, HDFC Life you have been tracking, but today SBI Life, anything else?
Yeah, in fact, SBI Life is now also coming very close towards its lifetime high levels. I think that zone, for SBI Life is around the 19, 20, 30 mark for the stock. It's now almost at 18, 20 levels, which means just about 5%, 6% away from its lifetime high level. So this indicates that the discussion which I was having in the morning, that with HDFC Life emerging as the leader, it's adding confidence to the other stocks from the entire pack, which could start to show signs of strength. So we're seeing SBI Life moving up higher. ICICI Pru also, I think if I'm not wrong, is heading towards a 200-day moving average breakout. Of course, much lower than its all-time high levels, but maybe even that stock could make a strong comeback going forward. So HDFC Life remains to be the top favorite from the entire insurance pack, and then SBI Life would probably be the second best candidate in terms of a potential new high breakout over the next few weeks.
Interesting. That's the take coming in on some of these life insurance plays. Today, of course, some of the pharma names are looking okay. Sun Pharma is the one which is actually leading the charts. Just a few days back, Divi's was the one which was the highlight. In fact, Divi's has been one of the strongest pharma names out there in any case. Jatin, on the charts, what's looking like a good pharma trade to you?
Yeah, I believe that the pharma space is coming back into the limelight. In the pharma space, we like Laurus Labs. So on the weekly charts, there was a decline towards the 20-week average, and now slowly it has formed a base and it's starting its next leg of the up move. So Laurus Labs is a preferred pick from the pharma pack. If I have to give levels, then 590 is a very crucial support for Laurus Labs, and on the upside, we am expecting 660 to even 670, which was around the previous all-time high. So I'm expecting a sharp up move in the case of Laurus Labs. So that would be our preferred pick.
Laurus Lab, that's the preferred pick coming in from Jatin within the pharma pack. But yes, of course, Sun Pharma as a counter has been showing a good uptick, a bit of a spike coming in on this particular counter. The markets are holding strong. Nifty Bank just trying to build on to the gains tick by tick. And IndusInd Bank is indeed leading it from the front. But Nikhil, given the fact that for tire companies, we did discuss autos, but for tire companies, the crude prices are coming down. Their raw material basket is expected to show some signs of an improvement, which will rather help their margins. Do you believe any such stock which is like good as an investment bet? Because Balakrishna Industry was one which I remember that post their announcement on the foray into new categories, it wasn't received very well. But along with that, Seat, Apollo, these counters did pretty well post the earnings. What is your take on the tire counters?
So, Shifty, if you look at the names that you have specifically talked, say, for example, Apollo Tires, two, three positive things have happened. First, if you look at it, rubber is a key raw material, which is almost 60% of the overall raw material basket. And there, if you see the price of chart of rubber prices have fallen by almost 15% in the last 3-4 months. Given that these companies typically carry 2-3 months of inventory, Q2 onwards, we are likely to see margin expansion in these names because the lower cost inventory will start kicking in, and these guys have not taken any price cuts. So that is something positive that will start happening for tire companies from Q2 onwards. And the fact that they have also announced restructuring of European operations, they want to cut down some of the plants which are high cost. That should also lead, in my view, to savings of close to 400 crores per annum. And if you look at valuations, stocks have become pretty reasonable out. The valuations are somewhere close to 7-8 times FY27 EV EBITDA. And therefore, from these levels, a 10-15% upside if rubber prices stay where they are is very clearly possible in a lot of these names. On the case of Balkrishna specifically, Balkrishna used to trade at a premium to the sectoral average. And given that they are getting more into the commodity business now of PCR tires, that is where the street got a bit worried that competitive intensity will heat up for the incumbents as well. And therefore, we have seen some correction in the prices of Apollo and Seat as well, given that Balkrishna will enter the space. But my sense is from a near-term perspective, Q2, Q3 should be very good for the tire companies.
Right. Right. Okay, Nikhil, Jatin, Kunal, all of you, thank you so much for taking the time out and joining us today on the show. And let's wind up for the day. I'm going to hand it over to Snehi for the closing trades.
Well, yes, let's take a look at how today's trading session has panned out, and a stellar recovery from the day's lowest point is what we've seen for the Nifty, a 122-point uptick coming in. We are close to the 24,900 mark. Remember, at midday mark, we were struggling to even hold on to the 24,800 mark, so we've surpassed that right now. It's a good move coming in on the Nifty. 0.5% higher is where we are closing on the Nifty. Let's take a look at where the Sensex is closing. In tandem with the Nifty, 0.5% uptick coming in on Sensex as well. 430 points, almost 450 points uptick coming in, comfortable above the 81,700 mark. Let's take a look at what Nifty Bank has been up to in today's trading session. Largely in line with the benchmarks as well. A 0.6% uptick coming in there. 55,700 is the level that we are sturdy at right now when it comes to the Nifty Bank. And well, yes, a 320-point uptick coming in on that front. The advanced decline ratio today has been pretty even, Steven. It's 1,400 stocks in the green, almost 1,300 in the red. So quite at the middle mark is where the advanced decline ratio is, but the India VIX is the one to talk about today. Almost a 9% cool off is what we have seen on India VIX on the back of some global comments coming in. So that's how the India VIX has cooled off today. But let's pull up the broader end of the market and see what the Nifty mid cap and small cap are doing. Small cap index up 0.6%, slightly outperforming the benchmarks, and you also have the mid cap index that has done pretty okay in today's trading session. Almost a 0.7% uptick coming in over here as well, outperforming the rest of the market. So the broader end has also been quite resilient in today's trading session. Some stocks to talk about. IndusInd Bank in action after SEBI's note and SEBI's action coming in, wherein they have barred the ex-CEO and 4 other people from trading in the market. So IndusInd Bank 2.5% uptick over there. Zomato, Eternal has done well, up 2%. Sun Pharma, Adani Ports, Trent, Tech Mahindra, Tata Steel, all of these stocks gaining in excess of with gains of 1% and more. On the flip side, Tata Consumer, BEL, Jio Financial, HDFC Life, Bajaj Finance are your top Nifty losers. Sectorally today, it was the day of the metals on the back of brokerage notes coming in. Multiple positive brokerage notes from Jefferies and Motilal Oswal coming in. Followed by that, you had Realty, positive note coming in from Morgan Stanley. Names like Prestige Estates have done very well in today's trade ahead of their earnings. Followed by that, Pharma, IT, Auto, Bank, Energy, Media. Only PSU banks and FMCG have closed in the red, so that's what the market breadth has looked like, and that's how we're wrapping up for the day. Nifty 50, a 0.5% uptick coming in. Around the 24,880 mark is where we are shutting shop.